And we're excited not only what we can do with generative AI in our software products and deliver value to the customers, we're excited about what we might be able to do it in our own business operations, the functional areas of our software businesses, and how we might use generative AI to drive more productivity in our businesses over time. So, really it's a two-pronged approach for us.
Welcome to This is Digital, a podcast brought to you by West Monroe. Join us as we talk to leading experts about bringing the digital mindset to your organization.
Hello, everyone, and welcome to This is Digital, a podcast that goes behind the scenes to reveal how digital shows up in the operations of companies every day. My name is Eric Brown, or Brownie, as many of my colleagues call me, and I'll be your guest host today. Another edition of Brownie Bites, a name I've given my episodes without any support from marketing. We'll see if it sticks. So, we all know that software has been eating the world for the last couple of decades, and we're often building software at West Monroe for our clients as a foundational component of becoming more digital across their organizations. Software in and of itself is only a component, however, often a very critical component in driving business value. Software must work in concert with customers' needs, employees, dynamic markets, and value chains to be truly impactful. And that will be the guiding topic for the podcast today: how we drive profitable growth and value with software. We're fortunate to explore that topic through the experiences of Scott Crabill, managing partner at Thoma, which is one of the largest software investors in the world. Thoma has invested in more than 450 software and technology companies over its 40-plus year history. And they do that through very close collaboration with their portfolio companies, centered around their pillars of partnership and innovation. I love that context for investment personally. It's very much aligned with the way we operate at West Monroe. We try to stay away from the projects that are transactional and focus on those that will really drive value and innovation within our clients. And it's the reason we've been great partners with Thoma. We've helped them and partnered with them in the assessment of a number of their portfolio companies during diligence. And again, looking forward to speaking to Scott about that partnership and what they look for in software companies. So with all that as context, let's dive in. Scott, welcome, and thanks for joining us on the podcast.
Well, thanks, Eric. I'm really excited to be here. Appreciate you all having me and appreciate the partnership that we have with West Monroe.
Of course. Now, I got a couple of quick topics to address before we get into the heart of the matter. The first, quick plug for Thoma recently launched podcast, Behind the Deal. Can you tell our listeners a bit more about that, why you started it, what it's about?
Yeah, we're novice podcasters over here, but we have started a season podcast called Behind the Deal. And basically this season, which is our first season, we've had a series of podcasts talking about different transactions in portfolio companies and how the deal came together and how the operating program has unfolded, and in cases where we've exited the business and where the business went and what the exit looked like. And we've had a series of partners talking with the CEOs of each of these companies to discuss the deal from start to finish. And this has been our first season. We've completed our first season. We'll have a second season next year, and we'll probably change the format a little bit. But in the first season, it's been sort of a deal-by-deal analysis.
Awesome. Thanks. So everyone, check out Behind the Deal wherever you might catch your podcasts. One other quick topic. I think I've heard, at least, that you're living on the West Coast, went to school on the West Coast, but have roots in the Midwest, Big Ten area where I'm from. Maybe an Ohio State fan, I heard.
Mm-hmm, that's right. Yeah, I grew up in Ohio, a town called Springfield, Ohio, which is a town of about 70,000 folks, 30 miles west of Columbus. And I appreciate you giving me a chance to rep my hometown because I love it there and still have family there. I did grow up a Buckeye fan. My father went to Ohio State. My uncle, my grandfather, sort of a family tradition. My mom was a teacher in Springfield. My dad was an entrepreneur, sort of a Midwest entrepreneur, started a number of logistics businesses serving the trucking industry and the manufacturing industry in the Midwest. But he grew up taking me to Buckeye games for sure. I moved out to San Francisco in the Bay Area for college. So I bucked the family trend and went to Stanford for college and also for business school as well. And that's how I got into this business. I followed some of my mentors in college into the finance business, eventually into the private equity business. And I became passionate about software and technology, really by virtue of being out here in Silicon Valley and in San Francisco. You kind of can't help but getting caught up in that world.
Yeah, absolutely. I can empathize to an extent, although my allegiances are with the University of Illinois, a bit more painful history than Ohio State. But let's get into the meat of the discussion. First of all, appreciate that background, a little bit about yourself, but you told us about how you got started, how you got plugged into the software industry. Can you tell us a little bit about your role at Thoma Bravo and how you got there?
Yeah, absolutely. So I joined Thoma Bravo about 10 years into my career in 2002. I had been at another private equity firm, Summit Partners, down in Palo Alto prior to joining Thoma Bravo. And I had the good fortune of joining this firm at an incredible time when we were trying to build out a software practice. So for the last 20 years, I've helped build that software practice out with my partners. And today, my main areas of focus, I'm on the investment committee. I'm one of 6 managing partners at the firm on our investment committee, which is the group of folks responsible for making investment decisions across all of our platforms. We have 3 buyout platforms, now 4 actually. We're recently starting a European effort. We have a growth equity platform and a credit platform, and we have an investment committee that makes investment decisions across all those platforms. Then I'm also on the management committee, which is the same 6 managing partners that's responsible for making operational decisions at the firm and essentially operating the business of the firm. But my primary responsibility and most important responsibility is I co-lead our application software investing effort across the firm, which represents about half of our investing effort, half of our investment professionals, in contrast with infrastructure software and security software. Application software is the layer of software that business users use to automate their business functions. And so that's what I spend most of my time doing.
So broken out a couple different categories of software investments at Thoma Bravo.
That's right. We cover the entire software landscape at the firm. We break it out into 3 big distinct areas: applications, infrastructure, and security. If you look at, the kind of the total software market research folks would, call it a $500, $600 billion market, about half of which would be applications, another 30% or so infrastructure, and then the remaining 20% security software. And basically, you can think of application software as the top layer, right? The business processes. Yep. Infrastructure software is the networks and infrastructure that those applications sit on top of, and security is the software that protects everything from intrusion and bad actors. And then within each of those broad areas, there are 15, 20, 25 subsectors that we cover. For instance, in application software, we cover the market through vertical areas. So we'll have a financial services area, a healthcare area, auto area, and many software companies build specifically for that vertical or that industry. And then there are a number of horizontal areas that we cover as well. You can think of that as enterprise resource planning or supply chain planning or customer relationship management, where it's a business function that cuts across every business sector. Between verticals and horizontals, there are probably about 25, 30 subsectors that we cover in the application space, and then the same on the security and infrastructure side as well.
Good background. I think we might get into the nuances of some of those different sectors in a couple of the questions, but let's start by talking about the criteria you use to consider and prioritize the investments you're making in software companies. How do you weigh factors like technology, market opportunity, the management team, et cetera?
Absolutely. Yeah, all those things you mentioned are super important. If I step back and just look at it from a global perspective, what we try to do is invest in great innovators and help them become great businesses. And I know we'll talk a lot about that as we're talking about profitable growth and that whole notion. But we look for large growing segments of the software market, as I talked about all those, subsectors within applications, infrastructure, security. We like to find growing spaces and large subsectors. Now, we're fortunate in that most of the sectors in software with this digital trend meet that criteria. Most of them are big, most of them are growing, most of them are very dynamic, great spaces to be invested in. So we're in a great space. We like to say software is the best place to invest. So we're fortunate in that regard. We then look for market leaders, companies that have a real market leadership position in their chosen space or their chosen sector. Think kind of upper right quadrant, the magic quadrant type of folks, and the ones that really rise to the top in terms of NPS scores and brand recognition and product capabilities. And then we look for companies with, kind of within that have great products and technology and really have invested in those areas over a long period of time. Companies that have a product that has a real good combination of a product market fit, the functionality is really fit for the business process or for the industry sector that they're serving, and companies that have built their products in modern, flexible architecture, ideally. And then if they have a good product, good technology, they are market leaders, they're in a good space, then we look for a great management team, right? We have a strong preference to work with existing management. And so the capabilities of the executive leadership team is really important to us. But so is their willingness to partner and collaborate. We work very closely hand in hand with our management teams, and we'll kind of talk about that process, I'm sure, as we get into it. So teamwork, collaboration, and the willingness to change and to drive change over a period of time is super important as well. And then a real desire to win and really to go out there and compete, a lot of energy, effort, enthusiasm, and that's super important too. This list is getting long, but there is a lot of criteria that we look for. We then look for the mission critical nature of the product. I talked about the functionality and the technology stack, but we really look for companies that have products that are mission critical, meaning their products really drive the business of their customers, making it a need to have product rather than just a nice to have product. Yeah. And software can kind of, fit many different places on that spectrum. But we look for the ones that are really absolute musts to have. And then we look for attractive financial, characteristics as well. So we like, recurring revenue models where there's attractive organic growth, business models with high gross margins, with good cash flow conversion characteristics. We like to see cash being collected, in advance of services being delivered and things of that nature. So that's pretty important as well.
Super interesting. I think, you mentioned one of the first things you said, we look for innovative organizations. Now, I think innovation in general gets conflated with these kind of big disruptive organizations in the consumer software space, which you're not really focused on as much, right? Innovation doesn't mean you have to be the next Facebook or Uber or Netflix, right? So in the companies you're investing in, innovation can be focused a little bit differently, right? And how you're taking a core enterprise process and more fluidly executing it, right? Or what are some of the other examples of that innovation you're looking for?
Yeah, that's right. I mean, we tend to get involved with businesses when their industry sectors and the companies have reached a level of maturity. Yeah. Rather than a venture capital investor or a real growth equity investor that's investing in companies in new market segments that are getting developed, and you don't know yet who the winners and losers are going to be and how the market's going to develop over time. Our businesses tend to be in a little bit more mature segments. So they've been driving innovation for, 5, 10, 15, 20 years in many cases to get to the point where they have that market leadership position, meaning they've built the best product, they've built it in modern architecture, they've put the functionality in that's required by the market. And then that innovation becomes incremental and continuous and constant, where you have great product management leadership that works with the customer base and the market to understand, where the functionality needs to go to drive even more efficient business processes and higher ROI, and where is the industry going from here, but it's a little bit more incremental than revolutionary. So that's what I mean by innovation.
And fun too, because you get to work more with the customers. You have an established base. You get to get their input and figure out how that directs incremental product strategy moving forward, which to me is really fun.
Absolutely.
So talking about value levers, I mean, first, you've been doing this for a long time. What are some of the key learnings over your 30-year career? What mistakes maybe even have you made in early software investments that you've learned from in more recent investments?
Yeah, there've been a lot, and most of the learnings we've had have been from mistakes. I've had a 30-year career. As you said, we've purchased 450 software companies at Thoma Bravo, and generally it's gone pretty well, but there have been some bumps in the road along the way. So, a few that kind of come to the top of my mind, and one that's, very germane to this discussion we're having today is we got to get that product and technology due diligence right up front.
Yeah.
And really know and understand what you're getting into. Do you have a product that is fully developed and you just need to kind of go on that incremental journey that I talked about? Do you have a modern technology stack, or do you have some technical debt that you're going to need to rewrite some of the code, or completely re-platform the product, or take functionality from one level to a whole new level? Or do you have a product that's not scalable that you have to customize for each customer? And really understanding deeply the technology and product capabilities of the software that you're getting into, so you kind of know what you're in for. That's an important one. Another important one is we're very data-driven at Thoma Bravo. Our due diligence is very data-driven, and by virtue of the fact that our companies have been in business for a long time and have lots of customers and lots of different products and lots of sales activity, and you can really dig in and to a deep level into the data in the business and what are the trends that you're seeing. And so we spend a lot of time in kind of deep data analysis. And that's really important to go through that process, to have the data help you make decisions, but then really listen to what the data is telling you. So kind of do the analytics and draw the conclusions that you draw from the data, and kind of trust the work you've done. And that will enable you, I think, to make really good decisions. That's number 2.
Yep.
Number 3, really, for us, we have a very focused approach to investing. Now, I almost want to call it kind of a cookie cutter approach. We have those things that we look for in a software business, and then we have a very specific way of kind of creating value and working with our companies over time. And for us, it's been really important to stay true to the tenets of our investment thesis and really buy the businesses that kind of check all those boxes in terms of what we're looking for. And, sometimes you have a tendency in a competitive environment to kind of, to loosen the reins a little bit. And maybe if 1 or 2 of those characteristics aren't there, but 3 or 4 of the other ones are, then, let's go ahead and lean forward and make the investment. But what we found is when we do that, it's a tougher situation for us, and we don't tend to do as well. So if we really stick to our knitting 100% and kind of follow our rule book and our playbook, that's been an important one for us. We like to have a plan with management and really a handshake with management on how we're going to operate the business and what the financial metrics we're going to try to achieve are. And we found where we don't have that real deep understanding with the management team up front, sometimes you can get a little sideways if expectations are different, because it really is a partnership with management and with Thoma Bravo. So we've got to have that kind of meeting of the minds and that shared vision, going into the mission rather than trying to develop it throughout the course of the mission. That's when you can really run into trouble. And then I think the other important one is really to be a champion for your management teams, and not to be someone who kind of puts up hurdles in front of the team. You really want to kind of clear the brush for your management teams and be their champions and be an enabler of their success. And I think that's super important.
Yeah, and it's interesting. I'm curious on some of the unique aspects of the way you approach investments in these businesses. I mean, you alluded to the partnership with the management team. You're not investing in distressed businesses. You're not going in and flushing out the teams and replacing it. You're finding those teams you believe in that you can partner with, give it maybe slightly different perspective, help with growth. What are some of the other unique aspects of the way you partner with your portfolio companies?
What we're really trying to do is help take them on that profitable growth journey, like you mentioned at the very outset of the podcast here, and take those innovators and turn them into great businesses. And the way we do that is a number of ways. First of all, we have an operations group here at Thoma Bravo, a group of operating executives that have run software companies. They've been CEOs, they've been CFOs, they've been functional leaders of software businesses and have developed a real expertise in software operations and an understanding of how Thoma Bravo operates software businesses as well. And they serve as mentors for the management teams of the companies that we buy. And they do that by serving on the board of directors of these businesses. And we have monthly or regular operating reviews with these companies, not only board meetings, but operational reviews where we're mentoring the functional leaders of all of these teams with a deep set of operational processes and operational metrics that represent a best-in-class software company and the operations of a best-in-class software business in each functional area to drive what we hope is some incremental growth in the business by investing in product and technology in the right way, investing in the products or the functionality that's going to drive incremental revenue over time, also investing in sales and marketing resources, but again, in the right way, pointed in the right direction, where they are going to be productive and drive incremental growth for the business, but also at the same time driving improved profit margins, and all the while, building better products and better technology. And so it's a journey over the investment horizon or the number of years that we're going to own the business to try to drive that incremental growth, incremental margin, better products, better technology through our operational processes, metrics, and our operations group that really kind of mentors and helps to implement those things.
And part of that in the way you invest is focused on acquisitive growth as well. So let's talk about that a bit, because it's a great way to add value to a software portfolio, but there's challenges that come with that, right? You're integrating different teams, different management structures, different software. How do you avoid some of that integration debt that comes with acquisitive growth?
Yeah, well, there are really two types of acquisitions that we do. One is you buy a small competitor that really can no longer invest in their product anymore, their technology anymore. They're just not competitive enough to be able to kind of keep pushing forward. And you buy that competitor and you support the product while providing an upgrade path, to your customers. And that doesn't require a ton of integration. The second is, really a product extension type of acquisition where you're buying a business that the product, works with your core product. It fits tangentially. It's something in addition that you can offer to your customers, something that they're asking for from, the vendor. And that requires a little bit more integration. But what we look for is businesses that are productive and strong businesses on a standalone basis that have good product functionality and good technology on their own. So some of those same criteria we look for in the platform, we look for in a tuck-in acquisition as well. And we look for products where the integration could be more, API type of integration or UI, UX integration, rather than having to completely rewrite the acquisition product in the same technology as the platform. And that can work well if both systems are built in modern technology and flexible technology. If you have a platform or an acquisition with a lot of tech debt that's built in old systems, it becomes much tougher to integrate at that kind of high level. So we try to stay away from, situations like that.
Yeah, and a big part of the diligence process. It's obviously where we come in and help in a lot of those scenarios and identify, does the API structure to the integration points, are they going to be able to scale the way we envision given the investment thesis too?
Absolutely.
What are some of the common challenges software companies face as they look to grow? And this is obviously where you're coming in and helping them along that journey. And then curious if the themes and those challenges differ in the different markets that you invest in, healthcare, finance, energy, et cetera.
Yeah, I'd say there's, to answer the second part of the question first, there's very little differentiation between end markets for us, whether that be the end market or the type of software solution, an application software business or a security software business or, a software platform in finance or in healthcare. It all sort of operates the same metrics, same processes. And really that's what we love about software and about our model is we kind of, again, back to that repeatability of the process and that cookie cutter nature of it is these processes, these metrics, the way you operate a software company really, really doesn't change. Now, of course, each sector has their own dynamics in terms of, what does the competition look like? What are the business processes, what direction is that market going in, but the way you operate a software company is really the same. And on that journey to profitable growth, the biggest challenge, I think, is always a cultural one. And there's a natural tension in the software space, for good reason, because many of these businesses, they were entrepreneurially led. They were, started with venture capital. They were in, new spaces that were growing significantly and becoming really big sectors. And the way to, build a market leader in that environment is really to invest for growth and to, grab market share when you can and invest to build the best product and the best technology and build a good management team and build out a go-to-market capability to do it quickly and to beat your competitors to the punch. And then once you do that and get enough scale, then many of these companies have looked to finance their growth through the IPO market. And both with, the venture market and with the IPO market, what those investors are really looking for is growth. They're not as focused on profitability. And again, for good reason. At that point in the company's life cycle, what they should be doing to create value is focusing on growing the business. And then you transition into, growth equity and a similar culture and a similar focus there. It's really once you get to us, where the businesses have gotten more mature, the sectors have gotten more mature, the market leadership positions are pretty well defined. It's time to innovate through, that kind of constant innovation, and the business should rightly generate a strong profit. And that's where we come in. But you do have to change the culture of the businesses that we invest in, because they've been for, 5, 10, 15, 20 years focused on growing the business, and the management team, that's what they know, and the employee base, that's what they know, that's what they signed up for. So the biggest impediment, always is kind of the cultural impediment and just getting the team on the same page to kind of change the focus a little bit. And that's what I'd point to there.
Yeah, I couldn't agree more. I mean, I have a career of building software for organizations, and yeah, they're technical challenges. Don't get me wrong. And those are fun, but a lot of the infrastructure in the software as it's evolved is the same in any industry. It's how do you build the people that support that software the right way? How, to your point, how do you change the culture? And how do you make sure that leadership is aligned and driving that culture change? Those are the biggest challenges. Yep. It's not the software as much.
That's right.
So as you're looking at kind of plugging in to help organize resources, change culture around that goal to more profitability, growth, et cetera, what are some of the ways you help businesses as you're investing in them manage the balance between those resources? Is it a similar balance between customer acquisition, product development, just general investment and scale? Or is that kind of unique to the different organizations?
It's similar. I mean, what we're looking to do is each software company, when they get to the level of scale where we're investing in those businesses, we're looking to invest in each area in a way that's as efficient as possible, but also the right level of investment to drive the amount of growth that is achievable in the market, while also driving our levels of profitability. And so that means investing in sales, investing in product, investing in support of your customers, investing in the implementation of the product, investing in marketing resources to drive pipeline creation, and not one at the expense of the other, but each one up to the level of diminishing productivity, if that makes much sense. So on the product side, we focus a lot on looking at which products are driving on revenue growth, which products are driving profitability, a real focus with product management on what the market wants. And then you make decisions on where to invest and how much to invest. And you look at metrics like, do we have agile processes? Do we have Scrum teams? Do we have enough, high quality onshore resources? Do we have some lower cost resources to help round out the capabilities in the product development organization? In support, you're looking to provide really strong support to your customers that drive a lot of happy customers, high NPS scores, but also are you driving, your customers to be able to get answers through a knowledge database, or do they always have to call someone? Have you developed the product such that you eliminate the need for all the calls? Do you have the right resources, and are they in the right places? From a cost perspective in the sales area. Do you have the right ratio of quota-bearing reps to non-quota-bearing reps so they can be supported and trained, but also you don't have too many people that aren't driving productive sales? So there are lots of different metrics that we look at to invest appropriately and optimally in each functional area. Again, not one at the expense of the other, but all up to a level of kind of maximum productivity.
I want to look present day and forward a little bit for the last part of the discussion. What trends do you see shaping enterprise software and its landscape today? And how are these impacting growth opportunities in your businesses?
Yeah, well, if you allow me to look backward a little bit, that would help. And the big
Sure.
trend that has been driving our market, and I think continues to drive our market, really, started 10, 12 years ago, which was the advent of cloud delivery capabilities for software, and the SaaS, or the subscription business model that kind of went alongside of that cloud delivery. And that's done a number of things. First, it's lowered the total cost of ownership of software for customers. The customer doesn't have to buy the software up front, so they can rent it. So less of a capital outlay up front. They can buy it out of the operating budget rather than buying it out of the capital budget, which makes it easier. They don't have to install it on the customer side. It's installed by the software vendor up in the cloud. They don't have to upgrade to a new version every time a new version is just pushed out to them. And what that's done is really opened up the digital revolution in all of these business sectors, and opened up the ability to automate smaller and smaller and more business processes, and enabled these old world companies to become technology businesses in many ways. And that has really improved the business model for software companies too, because the revenue is more recurring now. It's higher margin because, again, you don't have to send people on site to implement it. You don't have to support a bunch of different versions. You have one version in the cloud that's pushed out. And so you have lower support costs. You have lower sales costs as well, because there's a shorter sales cycles, because less of a perceived kind of requirement to put it on site. So customers are more comfortable buying quickly because they can, less of an investment for them. And that has driven the software market, the growth rate, to really go a little bit exponential. I'd say the growth rate in software from 2002 to 2010 was 10%, and the growth in software from 2010 to 2020 has been 20%. It's really doubled the growth rate of our space. So that trend continues, and we see that kind of continuing. We're still in the early innings of that transition. So, there are a lot of good legs on that trend as well. And then, as we sit here today, what everybody's talking about, obviously, is artificial intelligence.
Yep.
And that's, again, has been a trend that you look back on, and our portfolio companies and most software companies have been taking advantage of artificial intelligence and machine learning to apply that to data sets to help their customers make faster and better decisions for quite some time, really for the past 5 years or so. And you guys know that and work with a lot of our companies in that regard. You now have generative AI, which everyone is talking about, which I think is going to be a step function increase in, what our companies can then do with that technology to drive more ROI into the customer base. And we're in the very early innings of that. All of our companies are moving ahead in that direction, but it's still pretty new. And that over the next 2 to 3 years, that's probably where a lot of focus and attention will be.
Yeah, in generative AI with ChatGPT being released, right? Something everyone, general public, can get an easy experience with, has been a catalyst to open minds to the opportunity, and businesses to the opportunity of what's there in AI in general, not just generative AI, to your point, right? I mean, you've had businesses that have been utilizing machine learning and AI for a number of years, but now there's more interest in it. This has created the buzz that I think is very synonymous with, I remember 10, 12 years ago, just the excitement around cloud, and it seemed legit. This seems legitimate too. And I think the cloud is going to make it easier to experiment with some of the ways that AI can drive value, right? I mean, you were alluding to this point, but cloud has allowed businesses, software businesses, to experiment with new features without a huge capital outlay. You don't need to rack and stack servers. You don't need to have people inside a data center at all to experiment with something new, which is exciting.
And we're excited not only what we can do with generative AI in our software products and deliver value to the customers, we're excited about what we might be able to do it in our own business operations, the functional areas of our software businesses, and how we might use generative AI to drive more productivity in our businesses over time. So, really it's a two-pronged approach for us.
One question I have for you is maybe an investment or a couple of investments you've made that have had the biggest impact on a particular company or market, perhaps. I know you're focused on driving value, so I intrigued in the response to that question.
Yeah, that's a tough one because all of our, we love all of our companies and they all are doing amazing things and changing the spaces that they're involved with. But one that comes to the top of my mind is another one that you all have helped out with us on. It's a company called ABC Fitness. This is a business that sells into the fitness space. They have a commerce platform, so think of a billing engine, and also club management software for big box gyms like Planet Fitness or Crunch or Anytime Fitness, fitness studios as well. So think about, a yoga studio or a Pilates studio, and even personal trainers working with clients and helping them develop exercise plans and nutrition plans. And it's a cool space to be involved with, and everybody can really relate to the space, helping people kind of maintain good health and good fitness is really fun space to be a part of. And it's also a sector where we've had a bit of a black swan event, in COVID, in March of 2020 when the gyms closed and didn't really open up again until September of 2020. So they were closed for 6 months and nobody was paying bills. So that had a pretty big impact on revenue, not something you could anticipate. Right. So we've had some ups and downs with it. But what I'm really proud with that company is most of the technology in that industry was developed 30, 40 years ago. So, when you had green screens and you had mainframe systems, and maybe if you were innovative, it was an early, Windows type of application. But there hasn't been a lot of, revolutionary innovation since then. And we took it upon ourselves, and the management team at the company took it upon themselves 5 years ago to completely re-platform the system, the architecture, and the functionality of our product. And so we've spent the last 5 years and a lot of money, really replacing the technology and generating a step function increase in the business process automation functionality of the system. We're rolling it out now, and it's going to make customers more efficient, and it's going to allow them to offer, kind of the new innovative services and capabilities that our industry is innovating around. So, that's really exciting. We even doubled down on that investment in COVID. So we didn't kind of pull back on that investment despite the top line challenges that we saw through that period. And that was a tough decision to make. So, I'm super proud of our organization and of my partners for really supporting it, and so proud of the management team for making it happen. And then also proud of and thankful to our customers who really showed us the way. And here's what we need, and here's what a next generation solution should look like, and here's what we're trying to offer to our customers, and the ability to pick their bike in their exercise class, and so many different things that they were doing in such an innovative way. So I think it's really going to change the industry in a super positive way, and one that I'm really excited about.
It's interesting. So you started this software improvement prior to pandemic. Did the pandemic significantly inform that? And then they were ready to kind of respond as folks return to the gym?
Absolutely. And the management team, they really started it before we even bought the business. And then we, underwrote it and doubled down on it when we bought the business in 2018. And then when the pandemic started, we had that tough decision of, do we pull back the investment a little bit to save a little bit of money? And we made the hard decision to kind of keep going at current course and speed. And the pandemic definitely informed some of the development work because, as you know, the fitness industry changed in many ways. There was, more kind of fitness at home, online classes, online delivery, and many new kind of capabilities that came into the market at that period of time. We made an acquisition of an app for personal trainers, which again took advantage of all the personal training that was kind of being done in home environments or over using technology, and did make some modifications and kind of the software functionality to be able to enable some of these new innovative ways that fitness is being delivered across the industry.
So it's kind of driving. The software that you're building is driving this hybrid experience now. People are back in the gym, but they can also maintain a connection to the gym at home.
That's right.
Well, hey, we have to ask one final question. We ask all the folks that we speak to on the podcast, and that is, podcast name is This is Digital. What does digital mean to you?
Yeah, to me, digital it's one word. It's software. And you started the podcast by saying that software is eating the world. And we fully believe that. We're a little bit biased. It is the area that we focus all our energy and efforts on. It's our area of investment focus. But software is what's enabling this digital transformation across every business sector. And it's allowing banks and car companies and pizza delivery businesses to go from being old world businesses to technology companies. Really, you see commercial of the Domino's guy. You drop a pin, and Domino's comes and delivers wherever you happen to be. Or with a bank, you can do everything online now over technology. Cars, these electric vehicles are becoming Apple computers on wheels, and that's all enabled by software. And software to us is enabling the digital revolution. So that's how we define it.
I agree, and I think the excitement that represents is why both you and I love being in the software business. So appreciate you talking about that for the last 45 minutes and change. And thanks again, Scott, for being on the podcast.
Thanks, Eric. It was my pleasure.
Thanks for listening to This is Digital. If you enjoyed today's show, please follow or subscribe on your preferred podcast app. And don't forget to leave us a review. For more information on This is Digital, visit westmonroe.com/thisisdigital.